Partnerships are crucial to almost any technology company. And in the financial sector, where so much depends on trust and reputation, it is even more crucial than in other industries. Today, new entrants to the financial services industry have to compete not only with banks and financial institutions, but also with tech giants like Google, Amazon, Apple, and Facebook that are building and already offering their own financial services, partnering with incumbent financial players and fintechs. In other words, early stage startups and even more veteran fintechs must partner in order to grow and withstand competition over consumer attention. That is true not only for B2C fintechs, but also B2B fintechs. So do what you do best and outsource the rest, or partner with someone who will do the rest. Partnering with companies that have a large client base or offer a strong niche service may benefit you in so many ways. And we're here to talk exactly about that. So hi everyone, and welcome to our panel titled, How to Accelerate Your Business Growth with the Right Partners. With us is an amazing group of people representing different types of companies, which is actually a very nice mix. So dear panelists, if you can all please briefly introduce yourselves. Let's start with Diane, you're on top here in my Zoom.
Thank you, Ben. Very happy to be here. My name is Diane Albano. I'm the Chief Revenue Officer at Globalization Partners. We're a company who helps companies expand globally, easily, simply, and within hours, as people are starting to want to move to new areas of the world, new markets, and especially today with a work from anywhere type of thinking and hiring talent anywhere. Thank you, Ben.
Thank you, Diane. Ben, you're next here.
Hi, nice to meet everyone. My name is Ben Rubino, and I'm the head of Pepper Business Development. If you haven't heard about Pepper yet, it's 100% mobile banking platform, the first in Israel. And our mission is to reinvent the relationship people have with their money. We believe that by helping customers to understand and better handle their money, we actually allow them to grow. So glad to be here.
Another way to grow. Okay, thank you, Ben. Tim, you're next in the grid.
Good afternoon, everybody. My name is Tim Fitzgerald. I'm the EMEA Financial Services Sales Manager for Intersystems. Intersystems is a 40-year-old, $1 billion software company based in Boston, Massachusetts. I'm part of the global financial services team based out of New York. I personally am based in London and have global responsibility for Barclays and for HSBC and manage our business across EMEA. Glad to be part of the discussion. Thank you, Ben.
Thank you, Tim. And James?
Thanks for the invitation, first of all, Ben. So my name is James Farrugia. I am a partner in the law firm Ganado Advocates, focusing mainly for the financial services regulatory work. I regularly advise clients, looking at setting up both in the traditional financial services area out of Malta, and as over the past 2 to 3 years since the introduction of the regulatory framework for the crypto business in Malta, we have been very, very active in assisting clients sort of setting up their crypto businesses out of Malta and getting their permissions and authorizations by the local regulator.
Thank you, James. So we have a very nice mix here. As I mentioned before, a global hiring company headquartered in the US, a mobile bank headquartered in Israel, which is actually owned by Israel's largest bank, a law firm, which is part of a nonprofit public-private initiative in Malta, and a technology company, a vendor for database management and application development and integration headquartered in the US. So, I think it's a healthy mix here. So let's start, now that we agreed that partnerships are important and crucial, let's start with a basic question. How do you define a successful partnership? What are the KPIs or what are the results that you'd like to see maybe in a long-term successful partnership? Whoever wants to start, go ahead.
I'll start.
Yeah.
For me, I've always looked at partnerships as the key to success in literally every company that I've worked for. And for me, what defines a successful partnership is a mutually beneficial type of business arrangement so that both parties are getting something out of that partnership. So with Globalization Partners, we look at partnerships being crucial in all kinds of areas across the world, all different countries. And typically it centers on, it can be financial, it can be legal, it can be HR, but those partnerships are benefiting from working with us, and we're benefiting from working with them. And for us as a company, 40% of our business is derived from our partnerships. So you can see how important partnerships are for us.
Right, right.
Yeah, I'd like to underscore what Diane says. I mean, any partnership can only be considered successful if it meets the expectations and furthers the interest of each party in a measurable way. And also, crucially, it feeds the appetite for it to grow through a bigger or extended agreement. Though I must add, for me personally, a partnership is both what we have with the technology implementation partner in the traditional sense, but also with our end user customers. If we don't build a trusted partnership that we're both reliant on, then it just becomes a buyer-seller transaction, and it's worth so much less to both parties, and business flourishes less. Our financial services end user customers, Intersystems, banks and alike, bring us into conversations much earlier, seeking our insight and engaging with us to help solve some of those intractable problems. That is when you see a real partnership has developed, one that is valued and where the customer is proactive in opening the discussion. Also, an acid test is when you can rely on your partner during these hard times. We've proved in the last 18 months, and we intend to continue focusing on this long-term mutual success between both parties.
I actually couldn't agree more with Diane and James. I think an amazing partnership will be one that makes us equal more together than apart. It needs to be something like 1 + 1 = 3, because if we stay the same, if I bring something and let's say Tim brings something, so it needs to be equal more. Like, you don't want to stay in the same place and just go together.
Yeah, otherwise you might just choose to compete. Sorry.
Yeah,
I
agree with Ben totally, in the sense that obviously it's important that 1 + 1 = 3 when there is a partnership, and that the total is much bigger than the sum of the individual parts. But there are also two main considerations. On the one hand, you need to have common objectives, a common focus, and a common target. On the other hand, I mean, different skills, different contributions that they are making to the JV, so that at the end of the day, people are throwing all their skills on the table, and with the objective, with the common objective being a clear shared vision for both parties.
Okay, thank you also. So now we also know, how to set expectations and, how to really create a successful partnership. What are the basics for it in terms of the interests of both sides when they enter the partnership? How about creating engagement and, continuing really with the partnership after the deal is signed? Sometimes we invest so much in signing the deal, but then perhaps, I don't know, different parties don't care about it too much within the company, so they're not really pushing to grow the partnership. So how do you really create engagement for those partnerships that, might stay behind?
Yeah, often two organisations get together and explore the art of the possible with hope and aspiration that it'll lead to bigger things, and that's admirable. However, if there's no catalyst, no immediate compulsion to engage through participating in an immediate opportunity, then these things, unfortunately, are all too often wither on the vine. One party must come to the other with an immediate need, an opportunity where engagement delivers good prospects of revenue and opportunity for both. This drives the necessity for the agreement and focuses both really to put some skin in the game. And by that I mean, pay for some training, spend some money on some joint marketing initiatives, buy some development licenses. For a vendor, have the salespeople formally goaled and compensated as part of their formal sales plan. Because if everything's free, it isn't valued. And without this, it's all just pleasant conversation where there's a lot of polite and positive suggestion to each other, but no real action.
Yeah, if I can add to that, I think it is important that there is a clear plan, a clear roadmap as to where we want to be when. insofar as the evolution of the company. And more important than that is to listen to what your partner is actually saying, rather than pretty much being much more on the talking side rather than on the listening side. I believe that when there are these types of joint ventures or sort of these initiatives, it is very important that you talk less and listen more, rather than wanting to push your agenda. Because really and truly, if you listen more, the outcome tends to be much better, especially with a partner who is throwing on the table skills, knowledge, expertise, which you might not have, or you might not have as good as his, if you know what I mean. So I think that is a crucial point, because more often than not, we see joint ventures, not succeeding because people are not flexible. They are not amenable to adjusting their practices to deal with the practices of their partners, and rather than trying to find compromise, common practices which result in a better outcome, everyone tries to push his agenda. I do it this way and I do it better than you know you, and you end up, rather than focusing on things which, on the common objective, we focus on pushing agendas. And I think talking less and listening more is a very, very important consideration here.
Thank you, James. So before we dive into examples, because I'm dying to hear some of your real life partnership examples, scenarios, and stuff that you've experienced. So let's just touch on the topic of risks, or perhaps, things to avoid, things to make sure you don't risk when you enter a partnership, and what can you lose from a bad partnership?
I'll go ahead and jump in. I think Tim and James actually touched on this quite nicely, which is you sign a partnership and you can't just forget about it. You can't just leave it there. It really needs to be nurtured, and it needs to be mutual as far as putting a go-to-market plan together. I think where it falls down to your question is when people don't live up to the expectations. So I'll give examples at the right time, but when you look at our business, we set up partnerships with companies who need help with helping their clients grow globally or get a global footprint, which is where we come into play. But if we weren't able to satisfy that and said that we could, that's a risk. That's certainly a place where it could fall down. So it's very important to live up to expectations, to live up to promises, and to live up to the agreement.
I think that when you talk about risk in a collaboration, the biggest risk is not doing it. Partnership can be hard and sometimes cause uncertainty, but it also allows us to move fast and bring added value. So when you look at it, in the end, there are risks, but the biggest risk is not doing it because you're afraid of the risks.
Right, and you just spend your time and money and resources for nothing.
Absolutely.
Yeah.
Not wanting to, be just a repetitive of the good points that both Ben and Diane brought out. But to me, the two things come to mind. Firstly, the risk around the lack of engagement. If two parties are not working together, then something is seriously amiss. As Diane said, expectations have either not been properly set or are not being met. As we said earlier, there's probably a reason why one or both don't have the appetite to engage more fully. And it's all about the partnership being built on solid foundations and getting things right from the start. This is specialist knowledge. How you deal with one customer and how you deal with this particular market and how you manage partnerships is a particular skill. And that's why we have Intersystems proper partnership managers who are distinct from other roles, specialists in knowing what it makes and what it takes to get these relationships to work. We run specific events and conferences just for partners so they can reach their expectations, reach their goals, and meet the needs that are very specific to partners, and not just paint the fields with the same colour for any customer that you've got. It's important to recognise those, and that's when you value your partners as well, and when the partners feel valued. And both parties have got to see how easy it is to make money out of the association. the partner, if it's a boutique organization, looks at the vendor's resources to help them, and those resources have got to be made available to them. And if it's a big organization like a global SI or somebody, Google or AWS, then they look for the vendor's agility to get to places and make things happen that perhaps the larger organization can't. And the vendor has got to be responsive to that. Otherwise, if there's the lack of engagement, then the partnership isn't going to work. And secondly, the vendor not having a clear channel strategy and neutrality with their direct sales force. Nothing can sour a relationship more quickly if the partner is competing with its vendor, or vice versa. If the other party is feeling aggrieved by the other's success rather than celebrating it, then it's not going to be a happy marriage.
If I can add to what Ben was saying, I do share to an extent his view that there is the risk is actually not doing it. But as we know, I mean, a lot of JVs don't succeed. I mean, for some reason or another, and they don't succeed for several reasons. But the risk of not doing it for me is not really a risk, because as far as I'm concerned, I'd rather not go for it rather than go for it and lose a lot of money out of it, right? So I think it is very important that there is a clear agreed plan, that there is mutual trust between the parties, that we trust each other, that we can deliver on our part. We have a clear objective and a clear way on how we're going to achieve it, written down in a business plan, which we both subscribe to, and it hasn't been pushed down someone else's throat, if you know what I mean. And we are all convinced that we can run with it. We are happy with the financial commitment that we need to throw into the JV in order to achieve the common objective. And there is agreement on all these fronts and who is going to do what. I'd rather take a bit longer to make sure that we are totally in agreement rather than just go for it and then you end up failing. It's like really getting married, right? You don't meet your girlfriend and after a couple of days you go and get married and promise her that you're going to stay by her side for the rest of your life when you barely know her favorite color, right?
Yeah.
So you get to know her for a number of years. And then after that, you get comfortable and with the company, with the person, with the values. I mean, with spending the rest of your life with the person, and then as they say, you tie the knot. But you shouldn't rush into these things, because unfortunately, if you rush and you don't do your homework problem, I mean, the cost of slipping can be substantial. From a reputational point of view, from a financial point of view, on several fronts. So yes, doing it, but doing it properly. And if we have to say we're not going to do it, then so be it. Ultimately.
I'm sorry, James. In one question, you got the difference between business development and a lawyer. Like, we look at the same thing from two different angles, but
yes, I understand that.
I agree.
Yeah, and funny that you mentioned marriage. You know, if you ask my parents, who are actually here working with me, right? They're CEOs of our company. So they'll say that I'm taking too long, you know, because I'm 40 and still single. So yeah, but it's actually my choice. So no problem there. Anyway, James, let's stay with you. I'd like to ask you about Malta. Malta is an international financial center. Perhaps not everyone here in the audience is familiar with Malta and with your advantage to fintech companies or blockchain companies looking to set up an offshore entity outside of Israel or outside another country and set it up in Malta. So, you know, what makes Malta?
So it all started, I mean, about 3-4 years ago, when essentially an idea which was I mean, one of our senior partners was one of the 3 individuals who came up with the idea for the country to focus more on blockchain, given sort of it was an upcoming technology. This was back in 2017. And it was, I mean, proposed to government, I mean, liked the idea, they ran with it. We got cracking in the drafting of the legislation, and the legislation took a different, I mean, focus. There was a law which is called the Virtual Financial Assets Act, which essentially created a regulatory framework for all the intermediaries in the crypto space, be they cryptocurrency exchanges, be they market makers in cryptocurrencies, be they operators in the custody space, be they portfolio managers managing crypto assets belonging to their clients. So being a brokerage, simply buying cryptos for your clients. So they created a fully fledged regulatory framework for the service providers, and it worked because it attracted quite a bit of attention, and there was, I mean, quite a few international players, I mean, looking and sort of going ahead with the project in Malta. Again, there was that legislation also catered for the offering of tokens to the public, and the process of registering the white paper and what needs to go into it, and so on and so forth. As you know, unfortunately, the quality of certain offerings is fairly lacking, and it was felt that a regulatory framework had to be there. More important than anything, and this is my firm conviction, is that for the sector to strive and to do well, it needs to definitely have the banking institutions supporting it. I think that without the banking sector endorsing this industry, it will just not go anywhere, really and truly, right? For the simple reason that it needs the banking side of it to strike, whether we want to accept it or not. There is also.
Is it something that you feel is still being worked on in Malta, or have you made real progression in having the major banks from Europe or from other places work with with the companies that set
Let me
up their
tell you,
offices in Malta? Yeah,
banking relationships are always very tricky. Always very tricky, in particular in the cryptocurrency space. Having said that, having regulated intermediaries, which are themselves subject to anti-money laundering requirements, because they are subject persons, I mean, they have to implement, I mean, the AML obligations insofar as their clients are concerned. And we all know how complicated the travel rule is, and how much investment has to be made in making sure that you have the necessary infrastructure to deal with them, and also the investment in anti-money laundering procedures, especially with an online business which can scale, I mean, relatively quickly, right? In terms of having literally millions of clients. I think that having a regulated entity which is subject to AML, in line with the 50 MLD ultimately, because there was a clear drive at the level of the European Union to have these entities sort of subject to AML. I think it was the way to go. It didn't appeal to everyone, admittedly, but the strategy was never around numbers, but around, I mean, operators which want to embrace regulation. We have seen the European Union also heading in that direction with an initiative called MiCA, Markets in Crypto Assets, which is slowly rolling out a regulatory framework at EU level for crypto operators. And that is going to be, I think, a breakthrough insofar as Malta being one of the first movers within the European Union in this space. And with this initiative, which will take its course ultimately, but creating access to the single market of the European Union will make setting up an entity within the EU for crypto operators, I mean, a must ultimately, right? Because it will remove all the, regulatory risk associated with an online business which is not harmonized and regulated sporadically across the world, really and truly, and in some cases very, very differently. The second and third initiatives which were taken at that stage, one of them was the creation of a competent authority which focused on the certification of amongst others, blockchain platforms. And another one, which is called the ITES, Innovative Technologies and Arrangements Act. In a sense, this piece of legislation created the basis for the certification of blockchain platforms. Again, everyone is obviously coming up with these very, very good initiatives. And the certification of platforms is a way to go. Perhaps on that front, we were a bit sort of a very first mover, because the concept of certifying a blockchain platform and technology was a first in throughout the European Union at least. But I think it's really the way to go. And we are also seeing, even sort of this last week with the EU sort of rolling out their strategy on AI and how they are going to keep the technology under check and depending on its use. I think whether we like it or not, when we are going to see mass technology, which technology is going to be used extensively, I think essentially, especially when we talk about AI and its use in self-driven cars and other things where the life of individuals can be in danger if the technology is failing, I think that the need for regulation is going to kick in whether we like it or not. Rolling with that, there was a clear fintech strategy by the Maltese regulator, pretty much saying, listen, we want this type of business in Malta. Most of you might not know, but Malta has been very active in the online business, mainly on the gaming side, for over 20 years. And it is one of the largest remote gaming jurisdictions of choice over many, many years. And it houses a very large chunk of online gaming companies, I mean, globally. And which means that the IT infrastructure, the availability of resources in this area is quite advanced, because the whole ecosystem had to develop very actively to deal with the gaming sector. And we found that development very handy when we applied it in the fintech space, for the simple reason that there was already an ecosystem which could easily adapt and service a different segment, which is totally different from gaming, but ultimately with very similar needs.
Yeah.
And we are seeing the benefit.
Perhaps similar demographics too, right?
Yes. Yes. Yeah. And we are seeing the benefit of it because we're seeing a fair amount of international players looking at setting up their operation in the island. We have a regulator which is forthcoming to these businesses, very robust and very thorough in its assessment. But at the same time, it has an open mind. Let's put it this way.
Yeah. Okay. Thank you, James. And Diane, I'd like to ask you kind of like a similar question, or in general, why are partnerships so important when entering new markets? You know, it doesn't have to be the US where you are, or Europe. It can be anywhere. But why are they so important? And perhaps you can give us some example as to how globalization partners help in that way.
A lot of companies, the way that they start out their international growth may be that they see demand in a particular country, particular region of the world. And some companies already have partners to satisfy that need in a particular country before setting up, for instance, their own entity, their own presence. So a good example is our company. We started out with seeing demand coming in from not just US going outside of the US to go into various countries, but all of a sudden we saw the European countries and the APAC countries wanting to grow internationally, not always having an understanding the best way to get there. So similar to what you said, Tim, I set up a team of people that only focused on partnerships to first go out and test the market with setting up partnerships in various different countries, again, all around the globe, to test the viability of our companies wanting to grow internationally. Do they know how to grow internationally? And how could we help them? Because if you're not going to Malta and setting up an entity, a subsidiary, a branch office, immediately with all the work that's entailed to make that happen, you could actually hire people in Malta first to find out if they are in fact, or if that market is a good market for you, using what our company is known for, which is employer of record, and getting people hired quickly. So again, you can test the market. So examples of this would be, we've set up new partnerships in all over, like I said, the world. In Europe, we started with the UK, and then we moved into the Netherlands, and we set up a big partnership in Israel with CQ Global. These are companies that have a big presence and they have a need to help their clients to move outside of the country. So this has been, for us, the lifeblood. As I mentioned, it's 40% of our business. So we do a lot, of course, through direct, organic growth, and then we do so much through our partners, because at the end of the day, what's in it for both is we're helping each other. They are looking for ways to help their clients to grow outside of their jurisdiction. So way outside of the US, they could be in any country in the world.
Yeah.
And they say, we want to go into the US, or we want to go into the UK, or we want to go into Singapore or Japan. And we make that really seamless and very easy to do. But interestingly, James, my last company, we set up an entity in Malta for tax stamps to make sure that we could get the regulation of the financial backing of having regulated beer or wine or tobacco, so that if you have tax stamps, you can assure that it's not counterfeit coming into the country. Because Malta is a very nice step as you're moving outside of the Mediterranean.
So thank you, Diane. Thank you, James. And I'm interested in hearing more examples. So we'll get back to that in a few minutes. And Ben and Tim, I'd like to ask you as well in that regard. So let's start with Ben. Ben, so why should a fintech company want to partner with a bank? I mean, we talked about it earlier, but perhaps there's an obvious answer. Perhaps something else.
Why shouldn't they?
Why shouldn't they? Exactly. And you're actually both a fintech and owned by a bank, so
yeah, I'm just kidding. Starting to work together with the bank can be challenging for everyone, especially for fintech sometimes, but there are many advantages. The first and most important things banks have and fintechs need to acquire is trust. Trust is a fundamental issue when it comes to handling your money, and not less important, your financial data. When a fintech has been presented as a package deal with your bank, he enjoys that trust. Customers rightly assume that the bank made sure the security standards meet those expectations. The second thing is the bank as a distribution channel. Most fintechs at their early days have a product, but not yet customer base or the awareness. At that point of time, they want to invest money in the product itself and not in marketing. They're actually right doing so. This is a problem the bank can solve for them within the collaboration. In addition, the bank brings to the table cumulative knowledge in the field of compliance, regulation, legal. Fintechs can benefit from this experience and from the manpower when it comes to challenging regulation.
Thank you, Ben. And Tim, you work for Intersystems, perhaps a company that we're not all familiar with. You're a B2B company, is that right? And perhaps you can tell us why your marketplace is important for fintechs and how your partnerships with banks and fintechs come together.
Yeah, absolutely. We're well known in the healthcare marketplace with 67% market dominance. And 20%, that's one person in every 5 on this planet's health records being on our technology. It's important for a company like Intersystems not to be reliant on just one marketplace. So we're focusing tremendous effort now to increase what is a 15-year-old footprint in financial services and penetration. It's not that we're not new to financial services, it's just that we haven't had the focus that we have now. Financial services for us makes a lot of sense. Already we've got established businesses with some great names like Credit Suisse, Goldman Sachs, Lloyds Banking Group, Legal and General Investment Management, Fidelity, Broadridge, I could name a few more. But 15% of the world's equity trades daily are done on Intersystems technology. But there's more business to be had, and that's what we're looking to leverage our relationship and our partnership with. The healthcare marketplace and the financial services marketplace have many similarities, both highly regulated, both have got lots of legacy systems with diverse data types and complex data architectures, both are highly sensitive. So we're trusted with the important things, and what's more important than human life and your wealth.
True.
So that's really where we are, that's what we're doing. I'm part of a global financial services market group that's now some 40 odd people strong, based out of New York, because we recognize our customers they transcend international borders. And if you're dealing with a big international bank or financial services organization, you're talking to somebody in Hong Kong who's talking about an implementation that's going to happen in a data center in Chicago to service some customers in Europe. And we've got to be responsive and have centers of excellence, irrespective of time zones, and be responsive to people in organizations globally. And that's why, as a global organization, we feel we're well positioned to support our customers in financial services.
Thank you, Tim. Okay, so we spoke about, we assumed, right, first that partnerships are important, and then we said that you have to prepare in a right way to have a successful partnerships. We talked about not over-promising and not being afraid of the risk to start a partnership and being engaged. Perhaps you guys have more, do's and don'ts for the audience. We have over 500 attendees here today, and many of them work for an early stage fintech company or a more established fintech company, and they're looking to partner in hiring and in or partnering with a bank or setting up a branch office in Malta or using a company like Intersystems. So perhaps some examples and maybe more specific things that fintechs should consider before approaching maybe one of you guys and asking to work with you. Diane, you want to start perhaps? You're on the top box of the grid here.
Well, it looks like James was going to start, so I'm going to turn it over to you, James, because you spoke.
Sure, you started before.
I'm very polite.
No, actually, I will very gladly pass on to you, Diane. Obviously, because I respect that. So if you want to take a first shot, please do. Okay, I'll do it then. No, obviously the first thing to if they are operating or looking at opening a fintech business in Malta, I mean, the first thing that we need to do is to have a clear understanding of, I mean, the nature of the business, the intention, I mean, the target clients, the proposed marketing strategy, the resources that they plan to put into the structure, and making sure that the proposed activities that they want to pursue fit within I mean, the Maltese legal system and regulatory framework. And if the activity that they plan to pursue is a regulated activity, then making sure that they are geared up to deal with it, in particular on the compliance and AML side and governance. For the simple reason that unless I mean, they are going to invest especially for an fintech business, which, as I said, if these businesses, if successful, they tend to ramp up and they scale up relatively quickly in terms of their client base, and I'm talking mainly in the service providers sort of area. Naturally, they need to gear up properly on operations, AML, compliance, risk management, general governance, proper internal controls, proper substance. Solid infrastructure. So the regulator in Malta is going to, I mean, focus extensively on these areas when it comes to fintech business, especially if they focus on the retail market, which is generally the case, right? So I mean, that is a crucial, I mean, consideration when they are looking at setting up in Malta. And insofar as the organizational requirements and so on and so forth, these are things that have to be there pretty much from the outset. Apart from that, however, then the next area is making sure that there is availability of resources and skills needed within the team, not necessarily based in Malta, within the team in order to deliver on the business activities of the company, right? So in particular, when there is a startup, which means that you might have a lot of competent individuals, but they don't have an established business behind them, and the Maltese business is just an extension of the existing business of the group, right? So when you have 2-3 individuals which were ex-employees of a particular company and they want to give it a shot, I mean, themselves, again, Malta tend to give these types of businesses the opportunities to thrive, but again, they are not going to be particularly, the regulator will still expect a high level of controls and processes, and will not really say, okay, he's a startup, so I can close an eye on this, I can close an eye on that, and it's fine. I mean, the standards have to be there, and and they have to be robust. But more often than not, I mean, these things are discussed, and the way forward is found, which meets sort of every, I mean, the client sort of requirements. Let's put it this way. But overall, it is very, very important that, I mean, they come with a clear plan, clear objective, and clear commitment that we want to do things properly, because the regulator will not accept anything, I mean, less than that things are done properly to the desired standards, because the reputational risks are what they are, the AML risks are and compliance risks are what they are, and from the Maltese regulators' point of view, reputational risk management is very close to their heart. Let's put it this way. So
yeah, sounds like you have a very serious regulator there, and you've done a lot of work over the past 20 years. So interesting.
yes.
Thank you.
Yes.
And Diane, you're next now. Thank you, James.
Yeah, I think going back to the question, going and thinking about your strategy and understanding where you want to be, to me, always comes back to market research. I've actually written blogs on that to really understand what markets you want to be in and how you want to grow, and then what the lay of the land is in a particular country. Exactly what James was saying about all the regulations, the compliance, all the types of things that you have to think about as you're growing internationally, moving into these new countries. That's one of the things that a lot of times having a partner already in a country that can help you with some of that and understanding that is key. For instance, one of our big customers is Monday.com out of Israel. And it's a great company because they said, hey, we want to be in Canada, we want to be in Brazil. Can you help us get into these countries? We're not ready to set up an entity. So it really helped to have this company be able to grow where they wanted to grow quickly and easily. So I'm not quite sure I answered the question exactly, Ben, but I just wanted to add on that piece.
No, you talked about, strategy, and you gave us a real example of a company that most of the attendees here probably know, since they're an Israeli company. I use them myself. You know, they're doing well. So it's another
and very
use
similarly,
case.
Ben, a huge company that we're using right now, Zoom, is also a company that came to us and said, we want to move into all these different countries around the world. And they've done just that and have tens of people on our payroll based on the fact that they wanted to grow, as you know, everywhere in the world.
Amazing. Yeah. Thank you, Diane. Yeah. And Ben, you're...
So when we talk about how do we choose if you want to work with a fintech, the short answer, and it's very simple, fintech that solves customer pain point is a fintech we want to work with. But we look mainly at three things in every fintech approaching us. First, as I said, and it's really above all, the value proposition needs to solve a pain point, and it needs to be a pain point the bank not yet tackled. The best solution will also probably lead to a customer's change of behavior. The second thing, it needs to be as quick as possible, cost less than in-house development, and of course, efficient. If we can do the same thing with our manpower in a similar time frame, it just don't make sense for us to collaborate. The last thing is just how ready your product is. Are you behind the POC process? How much customers do you have already using your product? How stable is your system? The advantage that we talked about before, as the bank as a distribution channel, can be for the worst if your product isn't ready to scale. After understanding those 3 points, we then put it all on a scale and decide. I will use a short example to explain. A year ago, we met with a fintech called EcoBill. They help paying your house bills in an easy and efficient way that keeps you in control of your spending. We thought they solved an important pain point, but in terms of value for money, it made sense. But on the ability to scale, they had problems. They weren't ready to scale like we needed them to. Because we believed in the product and, not less important, in the people behind it, we helped them close those gaps and actually launched a few months ago, and it's been great. So there isn't a simple answer that fits all. We look at every fintech separately, test it according to these parameters.
Thank you, Ben. Thank you, Ben. Tim, do you want to add anything to this question, or should I ask you something more specific about Intersystems?
Yeah, I mean,
Yep.
we can talk about some of the more specific things,
Yeah.
but I'd like to underscore what Ben says. Any partnership has got to deliver a differentiator. You've got to be able to do something after that you couldn't do before. And people have never bought technology. People have bought answers to a problem, and they couldn't care less if it's an application or whether it's a box of oranges. Will it do
Exactly.
what they want it to do?
Cheers to that.
Got to be able to speak the language of the customer. We're an engineering company, and when we get overly inwardly focused on our own technology, which we're rightly proud of. But really, the person that I'm talking to as a banker isn't really interested in this line of code and how this bit of technology talks to anything else. He wants to know, will his light be on his office at 7 o'clock at night, or will he be going home to his kids? That's what he wants. And you've got to be able to speak their language. You've got to be able to talk raising equity. You've got to be talking about driving alpha. You've got to be talking about reducing risk. You've got to be talking about a few more basis points on this and other, not, Kafka messages and enterprise cache protocols and things like that, because it's not important.
Right. Show me the money, right? Show me the money is one way to look at it. Yeah. Okay. So show me the time, right? It's past our time. So I enjoyed speaking with all of you guys, and I'm sure the audience did as well. And we learned so much from your insights. And I'm really looking forward to meeting all of you guys in our next virtual event and in our in-person event. So thank you all. Thank you for joining. Thank you everyone for listening. And we'll see you in our next event.
Thank you.
Thanks, Ben.
Super. Take care. Bye-bye.
Bye-bye.